watching TheoTRADE. This is Corey Rosenblum, and you're watching the Theo, not the video, for the 27th of December here in the remaining days of 2023. We'll take a year-end review as we head quickly toward 2024. And we'll be talking about percent gains and some of the lessons, quick top-level lessons from the trading year. It's been a volatile trading year, and if you're looking just at the S&P, let's actually shift this to get started. We'll also talk about some inter-markets, crude, gold, bonds, and leading stocks, and stocks making 52-week highs. We'll talk about those in a minute. 50 of them joined. Leadership was in Meta, JP Morgan, Advanced Micro, Intel, Intuit, Qualcomm, and others, GE included. But before we get to that point, let's talk percent. So how to get a percent chart here in thinkorswim. We'll go over to our almost full 2023 chart. We have a few trading sessions left. It's just Wednesday. But let's go to here and put on the percentage. In general, with a few days of 2022, the S&P is up around 25% in the trading year. And that would be a little bit misleading because the broader market, or the equal weighted, we can look at the IWM for the small caps. The IWM is only, I say only, but only up 18%. And the Dow, DIA, the diamonds, up 13%. Let's look at the spiders again, like the SPX, up about 25% for the year. But let's take out the influence of the monsters of tech. And the monsters of tech, this is our TheoTRADE weighted symbol. It's Meta, Apple, Microsoft, Google, and Amazon. Put them all together, they collectively are up 88%. And the leaders, Meta, which is a monster of tech, Meta is up around 200% in 2023. Some of the others we'll look at. Microsoft, only up 60%. We'll take a look at Amazon, only up 84%, so on and so forth. And the Nasdaq is going to close out the year upwards of 50%. But once again, that's not what the market's doing, not what the broader economy is doing either. It is a little more in a chop spot, and that is reflected. Look at that SPY, 25% to the upside. Change that over to the RSP, and the RSP is the equal weighted ETF. Equal weighted ETF. What does that mean? Take away the influence of the monsters of tech and equally weight all the stocks in the S&P 500, and it goes from up 25% with the influence of the monsters to only 12% gain on the year. And that is more like it. That is what my main idea, the main game plan, or the main broader narrative that I've discussed for a few months here, which is that the economy, although recovering and expanding, is not growing at a 50% or even a 25%, which is the SPX. The truth is we are seeing growth, but the market itself is best defined as sideways, and therefore bull and bear opportunities are good and ideal to play. And that idea, again, taking out the influence of the monsters of tech as we end out the year, up around 12%, that is on par with the Dow and the diamonds here, DIA. Now the Dow is not a market cap weighted index, it's a price weighted index. And it is, again, the word only, that is an impressive gain for a year. The average is around 7%, so that's roughly double the average, again, annualized, or the annual performance, 7% on average for the stock market to gain. Not every year is bullish, of course, but that's where we are ending. And again, the other support to this logic, or that thought, is the sector ETFs. What does this mean? Looking at our sector ETFs, this is the financials, and in general, it has a trading range. And the financials are, again, I use the word only, but only up around 11%. Over here, we'll skip these for the moment. XLI, I is the industrials, only about 15%. B is the materials, up around 9%. E, energy, for the most part, is flat trading range and a little bit down or negative on the year, down about 3%. P is staples, down around 5%. It as well is best defined as the others are. This is a little bell curve distribution as a trading range, again, long and short positions. V, healthcare, is roughly flat on the year. And utilities, the weakest performer. It's been the weakest all year. has underperformed the market and is down 11%. So you'd think, again, if you're looking at the ETFs, and these roughly seven ETFs, again, up around 10%, 15, 10%, down 3, down around 5, flat, and down 12%, you wouldn't realize that the other ETFs, which are these, the K is your technology, is up 56%. Y, which includes Amazon and some of the retail names like Tesla, is up 42%. Microsoft dominates the XLK, and Apple as well. So that's the performance as we go to the end of the year. It's not as bullish if you're looking at the two strongest performing ETFs, or the sectors, or the stocks, I should say, that performed the best. This is a percent basis. NVIDIA is up around 240%. Meta, Facebook, 200%. AMD up around 125. Tesla, 115. Broadcom, 100. And Salesforce.com. What do they all have in common? For the most part, they're in some type of information technology or consumer discretionary, that is in general, or communication services. Information technology, communication services, and to an extent, consumer discretionary has been the leadership of the gains in 2023. Remember, the S&P is up around 25%, but the broader market, and again, most stocks are up around 15, 12, or 13 or so percent so far. But some stocks have actually underperformed the market, and the weakest have been names we've seen consistently. And the weakest stocks on the other side are Pfizer, Bristol Myers Squibb. Those are down 44%, 30%. Walgreens Boots, NextEra Energy, and others are down roughly around 44, 30, or 25%. But these are the outliers on the bear or the short or the downside. The outliers on the upside are about 5 or 6 stocks. Most stocks, like the bell curve, are performing around what the S&P did. So that's where we're going to end out the year. A little bit more bullish, but definitely not as bullish as the Nasdaq would have the most bullish traders believe. Definitely not a year that was a banner performance of a 50% gain. So outside of that, we take individual trades, individual ETF positions, and of course we made trades the ETFs of the Spider, the QQQ, and other products like that, IWM, or some of the other ETFs. Individual stocks will fall in the category of more sideways and range bound, because most sectors are going to end the year, again, roughly in that 5 to 10% gain. Others will close the year a little bit negative. What about crude oil? Crude fits the bill of the economy a little bit better. What does that mean? For the year, let's go back to our percent chart. We'll go to the scale, we'll go percent. And crude is going to end the year, that's CL, that's your crude futures contract, down about 7 or so percent, roughly where it started 2023. So with a year dominated by inflation and headlines about inflation and the Federal Reserve, the stock market's going to end a little bit higher, crude's going to end a little bit lower. But it is the bond market, which started the year looking at TLT, the bond market ETF. It's going to end the year about where it started, despite having some volatility up at its height around 8%, at the lows down around 18%. In the futures, not much different. The 10-year Treasury bond up around 4% at the peak, again looking at just a couple days at the end of 2022, and the low point was 6%. Bond market itself down around 14%. That's similar to the TLT, and the height around 6%. It's going to close the year about where it started. The headline, again, outside of inflation, has been interest rates. This is our TNX. We watch this very closely here in TheoTRADE. The TNX peaked. Take that percent chart off. It's going to end about unchanged. So the unchanged at about 4%. Let's actually take the percent off here in the bond market. So that would be a little bit more clear. 5%. 5% was the peak, and the Fed rate hiking campaign of 2023, a little bit of 2022, but mainly got those rates going in 2023, the pause, and now the thought, or the thinking, or the hoping at least, that the Federal Reserve might cut interest rates in early or mid 2024. That's the subject of another video. Nevertheless, finishing up with gold, gold's going to end the year on a high at the top of its longer term trading range. So gold prices are going to end this year at highs above the 2,000 per ounce level. And again, a 52-week high, really a new high for the gold futures contract. We'll take a look at GLD, also at the top. But again, it's at the top of a trading range of the last 3 years. Crude, not very different. Equity market, to an extent, there's the pandemic, there's the recovery, there's the bear market of 2022, and the, I'm not going to call this a bull market, the recovery back to the high, or flat market, sideways market of 2023. I do think, and I continue to say, that the Russell Index and the Dow and the unweighted S&P give the clearest perspective of shorting at the upper resistance or going long or buying, fade trading at the lower bound of the range, and it puts things into a better context, which is, this is not a bear market, it is not a bull market, but it's a sideways market. It's a market struggling or gaining. It's an economy that's expanding, but it is under still high interest rates, and those effect on financials and the broader economy, and of course inflation coming down, but inflation is still high. Neither bull nor bear, but sideways market, sideways economy, and we'll go into 2024, which is an election year, just in a few days. Hope everyone had a great holiday. Holidays coming up, New Year's and beyond. Be always careful and safe. This is Corey Rosenblum with tonight's Theo video update for December 27th, 2023.